Okay, hello everyone, and good afternoon, and welcome to today's Instagram live session. Apologies that we're starting this late, but we had a lot of difficulties that we needed to sort out. Apologies once more. Thank you very much, everyone, for being here. Yes, thank you. Remember, you could also decide to join us on Instagram because we're live on Instagram as well. We're also live on Facebook if you are following us on any of those platforms. So, sincere apologies to be here this late. It's been a lot. Okay, welcome back. Apologies, I had issues with my connectivity, so I was cut off for a little while. But we're back now, and thank you very much for joining. Before the network rudely interrupted, I was apologizing for starting this class late, and because we're starting late, we're going to keep it just within um, 30 minutes or less. And we're going to round up with the class. It's going to be short. No, it's not your network, ma. It is my own network. My own network is the problem. Yeah, right. Okay. Thank you so much. And happy to be here today. All right. So today I want us to look at something very, very important. And today I want us to look at stock investing, right? I want us to understand what it really means to own stocks. What does it really mean to own stocks? What does it really mean, to be a shareholder in a company? Because a lot of times people invest in stocks, or people don't invest in stocks because they don't understand what stocks are, right? And then some people who do, they do, but at the end of the day, um, they themselves don't they invest, but they don't understand what they are investing in or why they are investing. They just know that, okay, yes, I put my money in stocks and I have stocks, but they really do not understand what stocks are. They really do not get it. They don't know what it is to own stocks. All they just know is that, okay, they say we should buy stock. They are selling stock for in this place. Let's get it. For example, it's been a lot of buzz around stocks for Dangote refinery. Dangote declaring initial public offering, and the buzz has been everywhere. People have been saying, "Oh, asking how they can buy, how they can get." Really don't even understand how it works, right? Good morning, sir. I see you, Mr. Isaac. Good morning. Thank you very much for being here. Right? So a lot of people don't even understand what it is. They don't understand what it means to own stocks. And that's the reason why a lot of people that have had the bitter experience in the stock market it's because these people didn't understand what they were going into before they went into it, right? So a lot of times they made very terrible mistakes, right? Okay, so let's get to understand what it really is, right? What does it really mean to own stocks? What does it really mean to own stocks? All right. All right. So, what does it really mean to own stocks? So, like I said earlier, a lot of people say they are investing in stocks, but very few really understand what it means. So, owning a stock is not just buying numbers on the screen. It's not. It's actually owning a real small piece of a real business. That's what it is. It's only a small piece of an actual business. So it just doesn't exist on computer alone. It also exists in reality, right? So when a company needs money to grow, when a company needs to raise capital, right? Let's say, oh, they want to build more factories, they want to scale up, they want to develop more product, they want to expand into new territories or materials, right? What they do is they have an option to raise capital by selling shares of the company to the public. That's how stocks get to arise. That's how we have stocks, right? That's how we have stocks. Okay. So when you buy a piece of the share, then you own a piece of the company. So when you are a shareholder of a stock, you're part and parcel of that company. You're part and parcel of the company. All right? You're part and parcel of the company. So you're part and parcel of the company, right? You become a part owner of the company. And it's important for us that we understand this fact. That is what is also going to help us begin to understand how to choose the right stocks. Because some people don't understand that, okay, if I put my money here, I'm a part owner of this company. So they don't know that, okay, it means that putting my money in stocks requires that I understand the company first before I put my money in it, right? So imagine that you have a small bakery in Lagos that are owned by four friends, right? And then they decide that they want to divide the business into 1,000 pieces so they can raise money to expand. Then each piece represents the share. That's how we come about shares. So if you buy 10 shares, you now own 1% of that bakery. You own 1% of the bakery. I don't know if you got that. I'll go through it again, right? So I'm trying to explain to you how we come about shares for stocks. So imagine a bakery in Lagos is owned by four friends, and then those four friends decide that they want more capital in this business. So they want to open up the business to more people to join. So they decide to divide the business into 1,000 pieces so they can raise funds to expand. Now, each piece represents a share. That means if you buy 10 shares, you now own 1% of that bakery. So even though you're not baking bread, even though you're not managing the shop, you're still an owner. And that's exactly what happens with companies listed on stock exchanges, right? When you buy shares of a company, you are buying a portion of its profits, you're buying a portion of its growth, you're also buying a portion of its risks, right? So you're buying everything the company offers, the growth, the risks, everything applies. So there are two ways that stock owners make money, right? You can either make money through capital appreciation or you can make money through dividends, right? Now, capital appreciation, another word for capital appreciation is price growth. And that's another way that people get to make money through price growth. All right. Okay. So what exactly does that mean? So let's say if a company grows and they become more valuable, the price of the shares get to increase. It increases. So let's say, for example, you buy a stock for 1,000 naira, and then over time the company grows and the stock prices rise to 2,000. It means that your investment have doubled, right? And this happens because investors believe the company will continue generating strong profits in the future. Now, you know, one thing that moves the stock market is the forces of demand and supply. That's what moves the market. So it means that the more people buy into a stock, the more the prices will rise. The more people sell off a stock, the more the prices will fall. But the question is, what moves people to buy a stock and to sell off a stock? Right? One of those things is the investor's belief. If investors believe that a company will continue to grow, they will keep buying into it. And because they're buying into it, the stock's prices will continue to rise. Why? Because there is a lot of demand for the stock, right? If investors believe that this company is going nowhere and they decide to start selling off the stocks, the price of the stock will start dipping. So that's how it works, right? Another way that you get to make money in the stock market is through dividends. Dividends is also known as profit sharing. Profit sharing. That's another way to make money from the stock market. Profit sharing, right? And profit sharing is simply what it is. Some companies share part of their profit with shareholders, right? And then this payment is what is called dividend. So at the end of the quarter or at the end of a certain financial period, the company decides that, okay, it will distribute a portion of its profit to its investors, right? And that is as um, 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 a way of telling the investors that, oh, this is what you have earned and this is your part, this is your share. So if you own shares, you receive a share of the profits that have been declared. And it's almost the same thing as partners who are in business sharing earnings. You might be two people in the business, and at the end of the business, you guys make profit and you decide that, okay, let's share the profit 50-50 because you're just two. But in the case of a public limited liability company sharing dividend, the dividend you now earn is as a result of the share that you have. Right? So let's say the company declares dividends for 2 naira per share. And what you have is 100 shares. Right? So what you're going to get as your share, as your profit, as your dividend is 2 naira times 100. If you have a million shares, it's 2 naira times a million. Right? So that's that about making money in stocks. Now, stock ownership also comes with a lot of risks. It's not just about making the money. It's not just about getting shares. That's not just what it's about, right? Sometimes owning a stock does not guarantee profits. It doesn't. It doesn't guarantee profit. It doesn't mean that yes, so far you own a stock, you must make money. No. All right. So if the company performs poorly, the stock price may fall. If the company performs poorly, there might not be any dividend to share. So you might lose out on the part of capital gain, you also lose out on the part of dividends. right? And what can cause that? Examples are things like poor management decisions, economic downturns, right? Increased competition, government policy changes, right? For one, we've seen how government policies can affect some companies. Sometimes government policies drive companies out of the markets. Sometimes it could be just general economic downtown, sorry. Like we saw during the COVID-19 era, how a lot of companies almost went out of extinction or went to extinction, because of the COVID pandemic, because there's movement restrictions. In fact, some companies, the government had to build them out for them to still stay in business, right? So all these factors affect company preferences, company performance. And that's why for you to be a smart investor, you need to focus on long-term business quality, not just short-term price movements, right? So you need to think like a business owner for you to be able to buy into the right kind of business. So you need to move away from looking at stocks as something you just buy on an exchange. You need to understand that when you're buying into stocks, you're buying a business. So if you want to know how to choose the right kind of business, you need to start thinking like a business person, right? You start thinking like a business person. One of the most powerful investment principles comes from Warren Buffett, right? And he says that when you buy a stock, think of it as buying a piece of a business. That's the mindset you need to have to change everything for you. So instead of you to be chasing trending stocks or reacting emotionally to price changes, right? You need to be asking yourself some deeper questions. Before we get into the deeper questions, a lot of people who don't understand stocks are people who buy stocks because somebody posted, trending stocks for the week is this, that. They rush and go and buy. They rush and go and buy. There's something I always tell people about trending stocks, but I'm not going to say it here, right? I'm going to say it in the subsequent class that we're going to have in stock investing. Now, let's get to the questions, right? There are certain questions you should ask yourself as a wise investor before you get on to buy the company stocks. So it's not about what you just seen on the stock market. The first question you get to ask yourself is, does this company solve real problems? Do they solve real problems? So you want to know, are there real problems that this company is solving, or they're just here wasting time? All right. So if they solve real problems, it means that they will make money. Because if there's one thing that makes you money in life, it is you being able to solve a problem. Remember, one of the ways of making money is by giving value. If you're valuable, then you can make money, right? When you give value, you make money in return. Okay, so you want to make sure that the company you're buying their stocks are giving value. You want to make sure they are giving value. All right, so you need to ask the right questions. What problems are they solving? How are they making their money? Because that's what will ensure long-term sustainability. You also need to ask yourself if the company is profitable. It's not just it's funny when I just see a lot of people, and all they do is just tell people, just this stock price has come down, buy cheap stocks you can buy. Buying a stock is not about how cheap it is. It's not. Yeah, of course, a lot of people do that just to get trends and just, because that's what people like. People don't like what would actually give them liberation. They just want to hear what they want to hear, what will make them feel good. So people come and tell them best stocks to buy right now, right? And then they share trending stocks. But if you're chasing trending stocks, you will not make money in the stock market. Trust me. Another question you should ask yourself instead of chasing trending stocks is ask yourself if the company, sorry, has a strong leadership, because the leadership determines to a good extent how the company performs, right? Then another question to ask yourself is, will people still need this product, the product of this company, in 10 years' time? Will people still need it? Will people still need it? I always tell the story of in my stock class. And by the way, coming up is the how to make money from stock class. It's coming up next month, and it's one stock class that everybody should be a part of. It's a whole 4 days webinar where we get to break down what happens in the stock market for you and teach you how to get to make money in stocks. So I remember last year when I was teaching in the how to make money from stock class, I remember the story about someone who came to me and told me, "Oh, I lost money in stocks, and that's why I'm scared of getting into stocks again." And I asked the person, "Okay, show me, where did you put your money? Which stocks did you invest in?" And the person said, "I invested in Guinea Insurance." And I said, "Guinea Insurance? Who is Guinea Insurance?" In the class of insurance companies in Nigeria, Guinea Insurance does not have a place to stay, right? So, and that's where you had to go put your money. And now it's because the person really didn't understand that, yes, there's certain things I need to look out for before I put my money. Some people who invested in stocks invested because they told you in the office that you should buy this stock, so you buy. People just come to the office and just come and market it to you and tell you, there's this stock that is on ground, though. Nice. So before you know it, it will blow. Come and buy now. Oh. No due diligence, nothing you put your money in. I'll always tell you, if you invest without knowledge, you will pay the price very dearly. Trust me, you will pay the price, right? So when you're buying into something, you should be looking at the long term need. You should be asking yourself, will people need this thing in 10 years? What these people are selling, will they need it in 10 years' time? Some of us buy into stocks that we don't even know the products that the company is selling, but we buy the stocks, right? Some of us, we know that what they're selling is not sustainable. We know that in 5 years' time, people are not going to be using this thing. So by that time, what is going to happen to this company? So these are questions you should be asking yourself, right? So you should think like a business owner. When you think like an owner, investing becomes more strategic for you and less emotional. If you make it about your emotions, then you pay a price, right? And that's the reason why stocks are stocks are actually one of the best world building avenues or vehicles that you could use, right? For me, after real estate is stocks, right? And historically, stocks have been one of the most powerful tools for building long-term wealth because unlike certain aspects of investing like real estate, stocks allows ordinary people to participate in the growth of businesses, right? There's a certain amount of money that a certain place you need to be per time for you to invest in the real estate. But if you do not have the capital base at that time, you might not be able to get in. But the stock market makes it available for everybody to be a part of world class businesses because you can participate with as little as possible. And the more consistent you are with it over a long period of time, the more it compounds to give you the ideal returns that you need. So you don't need to start a $1 billion company to benefit from business growth. You simply need to own shares in companies that are creating value. Imagine people who own huge amount of shares in companies like Apple. Imagine how much they make every quarter because Apple pay their dividends quarterly, right? So owning a stock is also not gambling. A lot of people think, this stock thing is just gambling. No. Yes, it becomes gambling when you do not go in with knowledge. Anything you do without knowledge is gambling. Why? Because you're just making a guess which one will work out, which one will not work out, right? But when you have a definite plan, when you have a strategy, then gambling is out of it. So stock investing is not gambling, but you can also gamble in the stock market. When you're not doing it with knowledge, then at that point you might just be gambling, right? You might just be gambling at that point. All right. Um, okay. So when you buy a stock, you're simply saying, I believe this company will continue to grow, right? I believe this company will continue to create value. I believe this company will continue to generate profits in the future, right? And if that belief proves to be correct, your investment will grow with the company, right? So, like I said earlier, you have an opportunity to go in depth into stock investing. There is no investing that makes you money without getting knowledge first in it, right? And that's the reason why we're starting the how to make money from stocks, right? Which is going to happen next month, right? Sometime, I think sometime in mid next month. Okay, between 14th to 18th of April 2026. That's when we're going to have the How to Make Money from Stock class. We've trained well over 500 people in the past on the How to Make Money from Stock class. And we're looking forward to training more and more people in this course. This is one course that will give you clarity on everything about stocks, to give you clarity, a lot of clarity, right? Because we go deep down and we go to touch every nitty gritty, of the stock market and all the things that you should know and how to, be at advantage when you're investing in the stock market. One tip I'm going to leave you with today is that for you to win in the stock market, you must understand the business behind the stock. A lot of times, people don't look at the business behind the stock. That's the problem, right? What they're concentrating on is the price of the stock. They're looking at the movement of the stock. Yeah, that helps too, but you must understand the business, right? Because the business is what you're buying. Forget about what you're seeing on the screen. The business is the real deal, right? And the business has effects, on the dealings of what happens in the screen. I'm going to tell you guys a story of how much this story would throw a lot of light to how much what happens in the real business affects the stock market. Sometime in 2022, um, Cristiano Ronaldo decided that he was going to sign for Manchester United again for the second time. And he did. But when the news was announced that Cristiano Ronaldo was making a return back to Manchester United, the stock of Manchester United went up. It skyrocketed. Why? Because people believed again that with the return of Cristiano Ronaldo to Manchester, that Manchester was going to get back to winning ways and trophy lifting again. So it boosted the confidence of stock investors. And it's not just that. There are different other ways that confidence of stock investors are being boosted. Sometimes it could be a company releasing new products every year, and then the investors know that okay, this company, they're always competing, they're always on top, they always have new products that are exciting. This is where I should put my money in. There are a lot of things to learn. The problem is people want to do these things without first getting the knowledge. But like I said, if you get into investing without first getting the right knowledge, trust me, you will pay the price. Just like many people have paid the price. There are people that I know, if you're here and you've invested in the stock market before and it didn't turn out well and you lost money, just let us know in the comment section. Let us know. And tell us, truth be told, did you have good knowledge of the stock market before you invested or not? Right? And if we're to do a poll, you would realize that more people, right? A good percentage of people who lost money in the stock market did so without first gaining the right knowledge. They didn't gain the knowledge before getting into it. They just did it because people were doing it. Just like people invest because other people are investing. Oh, they came to the office and said we should buy this stock. So you said, okay, let me put my money. Or you heard it on social media that, oh, this stock. Like, for example, a lot of people, there's buzz everywhere about, oh, investing in Dangote refinery. There's a lot of buzz. But the question is, some people have not cared to ask themselves, why should I invest in Dangote refinery? Why? Why should you invest in Dangote refinery? Right? Have you asked yourself some of the deep questions that should ensure the long-term profitability of being there? For some people, it's just because, oh, there's a buzz. Oh, it's trending. Dangote refinery is coming to the stock market. Some people just want to buy because other people said they are buying. Other conviction. You do not have a personal knowledge, right, about why you should invest. You're just investing because other people are investing. If you invest because other people are investing, you will pay the price when other people are paying the price. What makes you a good investor is being able to point out the right investment. Now, I'm not saying Dangote refinery is not a good investment. I'm not saying that. What I'm saying is a lot of people want to get into it just because other people are doing so, not because they are convinced or not because they have the right knowledge about the projection of this company in the coming years, not because they know that this company will be profitable, right? That should be what should move you to invest in Dangote refinery, not that people are buying it or people are talking about it. What should move you to buy into it is you having good information about the company, where to, how much you think this company will be beneficial to you as an investor. Remember, to make money with shares in the stock market, you need to start thinking like a business owner. If you can't foresee an advantage for you, there's no need getting into it. If you don't know how to see the advantage for you, it means you need to learn. A lot of people do not know how to see the advantage. All they are doing is buying because people said it is good, right? That is you just following the crowd. And that's not the mindset of an investor. And this is where we're going to bring it to an end today. Thank you very much for joining us today on today's class, on today's session. Apologies once more um, for starting this live session very late. We're going to be back here again tomorrow by 12 unfailingly. To have another session on YouTube, also to be about the stock market, right? In fact, the whole of this month is going to be about investing, stock market, bonds, right? That's what it's going to be about, right? We're going to be giving you tips and bits. But if you want to get the full knowledge, if you want to get into the nitty gritties, then you need to come and register for the How to Make Money from Stock class. Thank you very much, everyone, for being here. Um, Thank you so much, my cohort two leader. I see you, Ma. Thank you and thank you. I see you all on Instagram, Madam Linda. I see you as always. Thank you so much, everyone. Thank you, Mr. Isaac. Thank you and thank you and thank you. Thank you for being here. Apologies once more for making it late to this class, right? It was beyond my control. Trust me. I wish I could have been here earlier. Would have looked quite, would have done, talked a little more about, what we're talking about today, right? But next week, we're going to go in deeper. Tomorrow, we're going to go in deeper in the YouTube live tomorrow. Thank you. My name remains Chukwama Kwenyezi. Remember, we're back here tomorrow on YouTube. YouTube tomorrow. And we'll continue talking about this. Bye bye. If you have any questions, prepare your questions and bring them tomorrow.